Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're peeling back the layers on a very specific name that's been lighting up our screeners, BJDX Inc., trading under the ticker BJDX. This isn't just a hypothetical example, we're going to use real-time, precise numbers for BJDX to illustrate exactly what makes a stock hard to borrow and what it could mean. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show BJDX lower/stock chart. Let's get straight into BJDX Inc., or BJDX. This company operates in the healthcare and medical devices sector focused on diagnostic solutions. They offer a unique Symphony technology platform which includes an analyzer and single-use protein detection cartridges designed to measure key diagnostic biomarkers found in blood. It's an interesting space, but our focus today isn't on their fundamental business model, but rather on the intriguing short interest dynamics. BJDX is a microcap with a market capitalization of just $1.04 million. Looking at recent price action, today BJDX is up plus 4.48%. Over the last 5 trading days, it's seen a gain of plus 22.81%, but looking at the last 30 days, the stock is still down minus 28.39%. Volume-wise, today saw 12,816,000 shares traded, which is significant when compared to its 30-day average volume of 7,276,856 shares, giving it a relative volume of 1.8x average. What is cost to borrow and why it matters? Show animation of CTB explanation. When we talk about a stock being hard to borrow, we're really talking about the cost to borrow, or CTB. This is an annualized fee that short sellers have to pay to borrow shares before they sell them. Think of it like an interest rate. If you want to bet against a stock, you first need to borrow shares you don't own. The broker charges you a fee for this loan. This fee is driven by supply and demand. If many people want to short a stock but there are very few shares available to lend, that fee skyrockets. Yes, it can even exceed 100% on an annualized basis, which means that holding a short position for an entire year would cost you more than the value of the shares themselves. A high CTB is a critical indicator because it means short sellers are paying a premium to maintain their positions, putting continuous pressure on their profit margins. Why the stock is hard to borrow right now. Highlight BJDX CTB numbers on screen. So, why did BJDX pop up on our hard-to-borrow screener? The numbers speak for themselves. The annualized cost to borrow fee for BJDX is a staggering 864.6%. To put that in perspective, that's an extremely high fee, signaling immense demand to short or an incredibly tight supply of shares. What's more, this isn't a static number. The CTB momentum has increased by plus 23 percentage points over the last 5 trading days. This tells us the pressure on short sellers is intensifying, not easing. When we look at the supply side, there are only about 45,000 shares currently available to borrow, which is incredibly low, especially when you consider BJDX's estimated float is around 0.9 million shares. Our internal composite squeeze score, which combines factors like CTB level, CTB momentum, shrinking borrow supply, float size, volume/price momentum, and technical setup, currently sits at 49.3 out of 100 for BJDX. This indicates a moderate, but certainly not extreme, potential for squeeze. Squeeze mechanics explained. Animation showing short squeeze process. Here's how a short squeeze typically unfolds. Short sellers borrow shares, sell them, and hope the price drops so they can buy them back at a lower price and return them to the lender, profiting from the difference. However, if the stock price starts to rise, short sellers begin to lose money. Add a sky-high cost to borrow like BJDX's 864.6% to the equation, and their losses accrue rapidly. With only 45,000 shares available to borrow, these short sellers can't easily jump in, and existing short sellers find it hard to find shares to buy back if they want to cover their positions. As the price climbs, and their losses mount, they may be forced to buy back shares to limit their risk. This forced buying creates a chain reaction. More buying drives the price up further, which forces more shorts to cover, and so on. That's the essence of a short squeeze. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction that the stock's fundamentals will eventually drive the price down, and they are willing to pay a premium to maintain that bet. Dilution risk check. Short X, no dilution risk for BJDX. One of the biggest silent killers of a potential short squeeze is dilution. This is when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can flood the market, providing ample liquidity for short sellers to cover their positions without driving up the price. It can effectively negate a squeeze thesis, even when the cost to borrow is extremely high. For BJDX Inc., our analysis found no recent dilutive SEC filings such as SMINUS1, SMINUS3, or 424B in the last 90 days. We also found no recent reverse split for BJDX in our look-back window. This is a positive sign for any potential squeeze scenario, as it removes one significant hurdle. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Share BJDX chart with key levels. So, for BJDX, what should you be watching for if you're interested in these dynamics? First, keep an eye on that cost to borrow. Will it continue to climb beyond 864.6%, or will it stay persistently high? Second, monitor the shares available to borrow. A further shrinking below 45,000 shares would be a significant development. Third, look for sustained volume. Today's 12.8 million shares at 1.8x average volume is a notable increase, but you want to see if that momentum continues for multiple days. And finally, watch the price action itself. Can BJDX build on its recent 5-day gain of plus 22.81% and break above key resistance levels? Any fundamental news from BJDX regarding the Symphony platform or clinical developments could also act as a catalyst. Remember, this is a speculative area and risks are inherently high. Show BJDX tick. In summary, BJDX Inc., or BJDX, presents a compelling case study in the hard-to-borrow landscape, with its astronomical 864.6% cost to borrow, extremely limited borrowable shares, and a small float. The absence of recent dilution risk is also a noteworthy factor. However, as always, high CTB means high risk, and a short squeeze is never guaranteed. This stock demands careful monitoring and thorough due diligence. If you found this deep dive into BJDX educational and helpful, please hit that like button, subscribe for more unique stock insights, and let us know in the comments below what other stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next one.